Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 2nd, 2012. Lots to talk about, so let's get started. So tonight I'm making a video because we had a big move today. Just as we discussed in yesterday's video, it was a very volatile day today because of the ECB report and whatever else there is out there. In any case, we did talk about the SPY, the chart of where to look at and what to look out for. Just like a chess player, we need to be reactive to the move that the market makes. I mean, we can't obviously tell the markets what to do. We just have to do what the general population of traders are doing because those are the ones that are going to move the market. In any case, let's get started. This is the chart of the SPY, which is the ETF that tracks the S&P 500. And again, I'll try to keep this in 7 minutes. And over the weekend, I'll probably do some analysis on individual stocks to prepare for the following week. In any case, what I did was I deleted all my drawings, and obviously a lot of times I will have to redo the drawings, especially the mathematical calculations, simply because the old mathematical calculation was back in all the way in these days here, which is kind of old, and sometimes I need to refresh the data just to make sure we're still on the right track. Okay. So, in the previous video, just as previous as yesterday, I believe I had a trend line drawn something like this, and I said if we break down through this trend line here and we confirm the next day, which is tomorrow, confirm the breakdown, then we will probably start heading down. But if you check, if you're new, you want to try and check on maybe about 4 or 5 videos ago where I talk about trend lines being drawn differently, because trend lines are drawn based on the individual. There's sometimes you can draw trend lines different ways, and sometimes there's just absolutely no way possible that you can draw a trend line. Some people have theories that you can cut over bodies or through tails, and that's okay. For me personally, I do not like cutting through bodies unless it was an unconfirmed breakout such as this here. This was obviously an unconfirmed breakout or breakdown, I should say, because there was no close below this bottom candle here. Now, here's the thing though, I can however redraw this trend line in a way where it would validate today's move and could give a possible bullish upside tomorrow. Do I think the bullish upside is going to hold or last? It's possible. I mean, the overall trend is still down. There's nothing telling me that the trend has changed yet. So if going long by going long tomorrow, I'll be taking a higher risk if I do decide to go long tomorrow, simply because you want to trade with the trend. The trend is your friend. Obviously, you don't want to swim against the current, because it'd be a lot easier swimming with the current. So, not saying it's impossible to do a counter trend trade, just saying it's a little bit higher risk. Okay, so let me kind of show you what I'm talking about here. Let me activate this line here. I can use these two pivots here, this pivot down here and this pivot down here, to create a trend line. Now, a trend line, technically, all you need is 2 pivot points. Okay. Now, sometimes you just can't, obviously you just can't draw a trend line where, sometimes it's just impossible to draw a trend line. I mean, you'd be cutting through way too many candles, etc. But as a chartist, there are different ways that you can draw trend lines. For example, like I said previously, I don't know if I mentioned it, but I believe that cutting through tails is fine, or through the bodies if there's no confirmation. But other people like to cut through bodies, totally, like hundreds of bodies of candles, and they call that a trend line. I'm a little bit more cautious on the way I draw my trend lines. Okay. Now, here's the thing. The reason why I kind of like this trend line here is because we're right at this 50 moving average. This candle here is a doji candle, but it closed above the 20 moving average. And guess what? We closed on higher volume. Okay. You see this candle over here? This candle was on higher volume, right? So we got a little bit more upside, and then we started tapering off on the volume. And then when you see another spike like this of higher volume on a candle that indicates a possible reversal, which is a doji candle, a hammer, or a engulfing candle, then that pretty much says that there is a possibility that we may have continued upside. Okay. here's the thing. Not only that, we had at least 3 days of downside before getting this exhaustion. What this possibly could be an exhaustion candle. So all indicators are possibly pointing to more upside starting tomorrow. Simply because, in addition to that, we have low volume. So I'm going to put it into more perspective later on in this video. I know I'm jumping around all over the place, but let me just let you know now that just because we broke down from this trend line here, the way this trend line was drawn earlier, doesn't mean that we're going to start heading down as soon as tomorrow. Okay. See, I think I drew my trend line this way. So we are under this trend line, right? So a lot of people thinks that a lot of people went short, I believe, probably because they thought that this was literally a breakdown. But you can also draw the trend line like this, where you actually broke down from this trend line, but they saved it above this trend line. Not only did they save it above the 20 moving average, but they also saved it above this trend line. So now the pivot points can also be drawn this way. And normally you don't have trend lines like this where you can draw it many different ways. For example, these three pivots up here, one, two. After these two pivots, you could already draw the trend line, and then just so happen the third pivot hit the trend line and then bounced off. You see, there's no other way, in my opinion, that you can draw this trend line here. But when you have situations like this down here, where there are different possibilities of drawing trend lines, you just have to be very careful. Okay, so you have to be cautious. So we have this pivot point down here. We have these pivot points down here. We have this pivot point down here. We had a false breakdown. Okay, this is what we talked about in the previous videos. We did not close below this candle here. This was institutional game playing. Went right into the 50 moving average and just jumped right back into this trend line. And then guess what? Today, very similar action where we actually broke down from this bottom trend line here, and then the institutions were able to bring it back up and close it above this trend line here to keep people from selling the market. Because once you have a herd of bears coming in, then the bulls just have no chance after that. I mean, fear is the greatest thing. Fear is the greatest emotion out of all three emotions, which is greed, hope, and fear, right? So fear is going to be the strongest. Once fear goes into the market, there's no stopping the downside. So right now, what am I saying? Well, here's the bad news. And I'm going to give you the good news and the bad news, and then I'm going to continue with the analysis. First, this is what I'm seeing on the charts. This is not what I think. I think we have continued downside, but you know what? It's what I see on the charts, okay? The charts are telling me, like I said in the previous video, that we had this up move here, just possible bullish consolidation for another push higher. Okay, but then I also said that if this pattern fails, which it did, then we'll have a big move to the downside, which it did happen today. We had a big move down. We possibly recovered. I mean, the SPY was only down 95 cents, but you know, nonetheless, the pattern did fail, and this wasn't really that nice of a pattern, I should say. But as it did fail, we also did have higher volume. Now the question is this a top, or is this considered down move and then higher? Okay, so that's the negative. The negative is we had a pattern that failed. So normally from a failed pattern, we have a bigger move to the downside and inverse to the upside if it was a bearish pattern. Okay, so that's one negative. Second negative is that the markets are in a confirmed downtrend. Okay, so you don't want to do a counter trend trade because that's just a little bit higher risk. So that's number two. Okay, so now that's my bearish standpoint. The bullish standpoint is this: we have a doji, which is a reversal candle, but the reversal candle did not come from an extensive down move. However, it is a reversal candle. We cannot argue with that. It's obvious. It's on the charts. It's yelling at me right now. It's a perfect doji candle. If it's not really perfect, but it's really beautiful if you ask me. Second, it closed above the trend line, which tells me that there's a possibility that we may go higher tomorrow. Third, the third thing is we created this doji on higher volume. In the past 3 days were low volume, so this could mean some exhaustion and some like a possible reversal to the upside. And four, it closed above the 20 moving average, which still puts this stock, or I'm sorry, and this ETF in relative strength or not relative strength to the market, because it is a market, but in strength, you know, the markets are strong still. So I don't see any type of possible weakness. We have higher highs and higher lows. Okay, but this is in the short term. Okay, so just keep that in mind. Okay, so we have a bunch, and five, if this counts tomorrow, is Friday, and then Friday is known for lower volume, and when you have lower volume, that gives the institutions a chance to prop the markets higher. I'm going way over 7 minutes, but I believe that I want to let you guys know what I'm thinking here. Obviously, this is not a recommendation to buy or sell anything, to go long or short or anything like that. It's just something that I'm looking at, and I wanted to let you guys know everything that's going through my mind right now. Now, the caveat, okay, so right now I'm gonna have to be more on the bullish side than the bear side, but the caveat, okay, the caveat is the jobs number tomorrow. If it wasn't for the jobs number tomorrow, I would say, yeah, I would probably look for some long trades. Any stock in good support, I'll probably go long on for at least in the short term, or at least until a double top is made over here, or even possibly the upper trend line up there, and then see what happens from there. But because there's the jobs report tomorrow, and Europe is still not in great shape, there is a possibility that we could continue to the downside. Now, here's the thing: if we can break down, now this is being very, very, very cautious. I mean, I really don't think, in all honesty, that it's actually going to do this. But if it does, then great. And then, if I have shorts in play, and then that'll work out perfect for me. But if we get a close below this trend line here, and then another close below that, then I'll be at least in good shape. Let me show you why this is being very conservative, because if I delete this bottom trend line here and I just make a channel, right? If you can see this, we could potentially create a channel like this, which means right at the 50 moving average, we could have major support down here. So there is a possibility we could continue down even lower. I mean, if we had, say, a down move like this, and if we had a doji candle like this that we have here now on this kind of volume, then I would say, yeah, definitely, let's go long. Okay, well, in my opinion, I'll probably go long. But because it wasn't that much of a down move, it was only 3 days, but 3 days is valid in my opinion. We did have substantial amount of volume. If it wasn't for the jobs number tomorrow and the low volume, then, well, I'm sorry, if it wasn't for the jobs number tomorrow, then being that it is low volume Fridays, then there's a potential that I might go on the long side. So for now, bottom line, I would be more bullish than bearish. At least that's what the charts are telling me. But the caveat is the ECB. So that's putting me in cash, meaning I'm staying out of the market for now, and I'm going to wait for what happens to see what happens next week. I don't think there's that much news coming out next week. In any case, I also did recalculations on these mathematical equations here, and I've redone it. And remember, in the previous videos I said don't really pay attention to these purple lines, because these purple lines have not been tested. I'm trying to pinpoint better accuracy in these calculations, but after I've redone it, I've done it today, so that's why it's on this candle here. I do have a level here at 142.78, so let's just say we spike into there, 3 days we spike into there, then I'll definitely be taking a short. There is a possibility, however, if we get a confirmation breakdown from this trend line here, this would be my target, which is 120.72. And of course, the pinpointing the purple and the pink line are so close together, it gives me more validation that if we do break down, that this would be the bounce point. Not saying that it'll get all the way down here, just saying that this would be the point where I would probably look to go long, at least in the short term. Okay, so so let me see, let me try something here. I'm going to take the top of this here all the way to the breakdown of this day here. So I'm just going to draw a straight line. I'm just curious, I've never actually tried this, but it may not work actually. So let me just activate the drawing and move it around here. Yeah, so if we break down around here, then that would validate the symmetrical move, and markets are normally symmetrical. If we actually broke down, say, soon, maybe within the next 2 days or next week, that's still in a pretty good area of support right around here anyway. So the 120 level looks to be valid, and that's only if we can break down. Again, there's so much manipulation in the markets right now. I don't think the Feds are gonna want the markets to take a big dump like this. I highly doubt they're gonna allow that to happen, but and that's why a lot of people are more bullish than bearish, because they know the Feds aren't going to let the markets tank. However, I still don't believe that QE3 is going to be released anytime soon, simply because they do have the other one. What is that called? Operation Twist, and Operation Twist will be in effect to the end of this year. So and it's election year, so of course we're gonna probably be more bullish than bearish. Okay, but that's what I think. Again, this is not what the charts are telling me. So it is what it is. I mean, as a chess player, you just have to make sure that, because of the manipulated market, and because it could go either direction based on the jobs report tomorrow, for me, I'm gonna stay in cash just to make sure that I'm safe. But if the intraday, say the hourly charts, show more of a bullish move than a bearish move, then I may take the bullish standpoint into next week. Or if it looks more bearish than it does, then I'll be more bearish into next week. Again, the thing is, I'm more bullish than bearish. That's what the charts are telling me. However, if we break down from this bottom trend line here, then I do see continued downside, and therefore, once fear is in the market, there's no stopping it. Even if you release rumors like they've been doing, and they do all this kind of stuff just to prop the markets higher, it's probably not going to work if there's enough fear in the markets. Okay. So this is the chart of the UUP, which is the US dollar. Sorry for talking so long about the SPY, but I guess again I talk too much. I do apologize, but I just want to make sure that I let you guys know everything that I'm thinking. This is the chart of the UUP. We have this pivot point here, this pivot point here. We have a false breakout. It's very similar to the SPY, and the difference is we actually did break down here, or does it look like we broke down here? Not really, because if you look, when we broke down from this upward trend line here, we closed right below this 50 moving average. Let me just kind of zoom in here so you guys can have a better look here. After we broke down, right, did we have a close below this candle here? Remember in the previous videos I said we need to see a close below this candle here to validate any more downside. And of course the US dollar, if you didn't know already, is inverse to the market, so the dollar goes up, the markets go down, etc. So we did not get a confirmation candle. This candle did not close below this candle, this one or this one. It looks like it did, but it didn't close below this below the low of this candle here, and neither did this. And of course, obviously, this one did not either. So there is a possibility, okay, not a probability, but just a possibility. And this is not basing it on odds, simply because it's over. It's kind of like right here, right in the spot where it could break higher, which means it could break back up above this trend line here, or we could just get a bounce right off of that. And I don't see any volume indicating that there's any type of exhaustion on this doji candle. In fact, the only thing that looks bearish to me about this candle is that it's under, or the only thing that looks bearish about this pattern here is this candle is a doji candle. That's it. I mean, yeah, it's under this trend line here and it's above the 20 moving average, but again, that's because it's kind of like in a neutral standpoint, meaning it could go up or it could go down. So now the next thing we need to see is a close above this candle here tomorrow to validate the move has been changed from bearish to bullish, in which case the market should go down, or we get a bounce because of this doji candle here. But then we also have this 50 moving average here, so it's kind of like right in the middle. But when you have situations where it's right in the middle of moving averages and trend lines and whatnot, then the possibility of a big move to the upside or to the downside is probable, and that's the only thing that's probable in my opinion. That as of now we may get a big move up or a big move down. The question is, which way is it going to go? And again, even if we have a big move up, right, tomorrow is low volume, okay, unless we get more volume into the markets, we may like sell off in the beginning right after the jobs report or whatnot, and then float right back up because the volume is just not there. And we've been seeing that in the stock market now, where we sell off and then we just float higher, and it's just because the volume is not there. In any case, I better stop rambling on, and this is the analysis that I have for the SPY. I just want to say again, thank you very much. Because you guys watch my videos is giving me the drive to continue to make them, and thanks for taking out time of your day to watch my videos, and I do appreciate it. So hopefully I see you in the next video. God bless to you, and good luck in your trading.